So we are here with the undereducated. No, okay. Um, this is a kind of a special edition of Mortgages with Millennials that we're doing. Normally it's a live show, but we wanted to pre-record and then make this available for our audience to peruse at their leisure. So Kristin and I are very pleased today to have Associate Professor at Duke's Engineering and Master in Fintech program, Marvin Chang, joining us. Marvin, welcome. How you doing, man?
Hey, pleasure being here. I love your background, Robbie.
Oh yes, well normally I do audio podcasts, it's a video, so people can see I'm at this fishing lodge. Like I told Christian, we got the American flag and a truck. Where I got my beard. We're like a real American. Probably all of this will be changed by the time this properly airs. But yeah, man, I'm enjoying Colorado in the summertime for sure. Where you said you were in Dallas, correct?
I'm in Dallas, exactly.
There you go. Green
Real
Kristen,
America too.
that is real America. Kristen's in LA. That's some type of real America as well. So we got three time zones covered today. I think we're very excited to talk to you. We know your background's in capital markets, but about kind of the wants and needs of the next generation and how mortgage companies are addressing those. And I know you had said to us offline that it's really about listening to the next generation. What do you mean by that? And what have they signaled when you have listened to them?
Well, I think number one is home ownership is still fundamental, right? I mean, there is that visceral pull for home ownership. You saw that with the millennials, right? Last several years, if you've been tracking millennial home ownership, right, it definitely was slow to get going, but it ramped up dramatically over the last several years, right? So there's that whole dream of American, sort of that American dream of home ownership is still resonant, right? I'm a believer in that, right? I think what's happening is clearly everyone can tell you is that it's become a much harder slog to afford a home, right? So the challenge now is how do you afford the house? And I think you need to really go from sort of like, anecdotal, hey, this is a challenge, to really understanding it and to be on the inside of this OODA loop is you need to think breaking down that cohort, right? There's a lot of millennials and Gen Zs coming up online. And what do they need? Where are they in their financial abilities? And how do you help them achieve the American dream?
So, Marvin, one of the things that I've been really interested in looking at with millennials in particular over the last few years is this just total I don't know, feeling that home ownership is out of reach. So it's exactly what you're talking about here, and that while people are entering that first-time home buyer age and they want to take a look at making these moves, they feel that it's just not even in their it's so distant from them that it's not something to even start thinking about. And I'm curious from your perspective, being a professor and being very active in educating the next generation, how do we bring up people in a world where they do have an affordability crisis? They do have these very real barriers to entry. But how do we think about educating the next generation in a way that does give them that feeling of maybe some optimism and also gives them a real path to success when it comes to thinking about real estate in the future.
Yeah, I think education is critical, right? Just being, I can say that a good chunk of this cohort will not be approaching it like I did, right? I mean, I sort of got dragged into buying a house because my now wife wanted a house, and I'm like, what's a mortgage? Like, what do I have to do, right? Now I look at my students as well as I'm a little older. I've got sons, right? They're very financially savvy, right? Because it's become gamified, right? Whether it is credit cards, FICO scores, things like that, right? So I would say doubling down on those capabilities, and just like what we've seen successful, right? This is all, think about this as all a lead funnel, right? The traditionally lead funnel comes in when, my girlfriend says, hey, let's buy a house. Now the lead funnel can go to the early 20 somethings who are just coming out, just graduating with the first set of credit cards and all that. That's where technology comes in, right? You see technology platforms that can enable you as a financial as a player to start that cultivation very early on, very cheaply, right? And then build that engagement.
Yeah, that's really interesting. I'm the executive director of a nonprofit called First Home IQ, and we focus on financial literacy through from the point of someone first starting their financial journey around 16, all the way through buying their first home. And I'm we're trying to develop these like money milestones where you think about at what age should you know what things, and at least even if we can't totally solve for some of the affordability challenges, we can at least set people up for success to be able to make smarter decisions about their money. So, how do you feel about our core money milestones that we talk about are at 16, you're old enough to drive and get a job. You should know about budgeting, saving, and investing. By the age of 18, you are old enough to get credit card offers and student loan debt offers. You should know how debt works and your credit score works. And then by 21, that's when we look at real estate appreciation with a mortgage and knowing that process of buying a home. How do you feel about those money milestones and anything you'd add to that or change about that?
Yeah, I mean, I listen. I took my youngest to doctors, and he's 16 this morning, and he goes, "Dad, I need to stop at the bank." Like on the way back, right? So getting into this early is critical, and I think education and I guess my background says Duke, right? But the key is it should not be anything exclusive, right? It should be something that's pervasive, you should reach as many people as possible in a way that it meets them as opposed to them having to figure out where to find the information. I think one example, I've been involved previously with this organization called National Foundation for Credit Counseling, right? That's sort of the traditional way, sort of like, well, you need credit counseling now because of your financial straits. Like, okay, well, it made a lot of sense, right? Because it was expensive to deploy those capabilities, credit counseling. So what you're basically doing, Kristen, is you're actually proactively engaging, right? Engaging in a way you're meeting your cohort, your clients where they are, as opposed to them coming to you, which is sort of the traditional way of credit counseling.
So I want to follow up on that, Marvin, because you talk about meeting people versus making them find you. Where do you think the mortgage industry specifically has done a good job of that versus maybe they could be doing a better job?
Well, I think, okay, meeting people, right? Meeting people, where has mortgage done a good job? It's I'm really bullish about these digital capabilities that confuse the customer journey, the financial journey, with the actual execution of it, right? I don't, nobody ever wakes up in the morning saying, I want a mortgage, right? It's I want a house, I want habitation. I want to fulfill my dreams, right? If you as a mortgage company can understand that as the driver, right, you are just you're providing the tools to enable that. It's critical, but it's not a fundamental need, right, of somebody. So you need to sort of step aside from, outside of the sort of the confines of I'm selling mortgages or I'm providing mortgages to I'm working with my customers, my prospects to achieve their dream. And I think whether it's digital, but I mean it's not a digital only process. I mean we're seeing that, right? The direct consumer direct model works so far, right? You have to have a person. There's a need for somebody to help at certain points of the process.
We've
So
talked about that. We've talked about that a ton on our show where Chris and I have gotten mortgages, and even for us, it was daunting, or some parts were confusing. And I can only imagine what it's like for people that have no background in mortgage. I want, I want to. Sorry, do you want to say something quickly? No. Okay. I want to take it one step further and bring it to the product side of things. There's a lot of talk these days about down payment assistance programs. Uh, where do you feel like mortgage companies have done a good job listening to young customers and responding, creating products, and where could they be better in that sense?
Going back to my point, right? You're better placed in the long run thinking about the consumer, right? So too many mortgage companies still think about themselves as mortgage companies, right? Down payment assistance, potential, shared equity products, all that. Those are seen as not core or off the beaten path, right? Imagine if you have a process or have the ability to sort of incorporate all those different options into it, to wrap it into the service, right? I think that's a major mental milestone, right? It's a strategy thing, implication. Like, are we a mortgage company or are we providing these capabilities? But it also impacts your operational and technology structure, right? You need to have the right technology around to enable you to scale this up. You need to have the operational capabilities so that you are not, let's say, reinventing or re-underwriting the same thing multiple times, or so you can repurpose stuff, right? So you can create a path, a easy path for that customer.
I love that. And I kind of want to dig in just a little bit deeper on that because down payment assistance, shared equity programs, those are things that we've talked a lot about on the show and in our lives, I think, but that this is a way forward for in a world where it's really unaffordable for the next generation to think about home ownership. We can start a lot earlier if we have access to these kinds of products. So I'd love to hear you. I mean, I don't know how much you have worked directly with mortgage companies in deploying that, or if you can speak to some of the ways that mortgage companies can better implement products that reach the next generation in a way that really is more inclusive, I guess, and brings people in earlier.
Yeah, I mean, I have. I've, for example, home equity loans, right? Piggyback home equity. That's a good example of where, in terms of technology, in terms of operation, in terms of these entities offering it, it's separate, right? It has not been integrated, right? So how do I go about this process? Even down to fees, right? Because there's everyone needs, at the end of the day, everyone needs to be paid, right? And I've worked with shared equity programs that we're trying to do this essentially because they're sort of greasing the skids on this, like not provide economics, right? That doesn't necessarily work very well if, because you want to incent the operators to do to work together, right? Those are things, right? Down payment assistance, too often it is a separate search. Um, Either you have an LO who knows about it, a realtor who knows about it, or you have to go through your own process, or even if it's part of a point of sale capability, it's off to the side, right? When you think about the calculations, what do you want to do as a first-time home buyer, right? Your first thought is, I want this. I want to live in this place. I want to live in this house. I may need, this may be me, my girlfriend or boyfriend, or this is me with this set of friends, right? How do I structure this? And it shouldn't be, let's find the loan officer who understands this, or let's find an institution who understands this. Or actually, it should be an institution who understands this, because then they can help you with the journey.
Yeah, really quick. I know we're coming to the end, but one of the research points that I found really interesting with millennials is that is this lack of trust. So 2 in 3 millennials said that they didn't trust lenders or they didn't think lenders were trustworthy or reliable, and that's come up really consistently. And I kind of wonder if we knew about some of these products and that it was coming from the institution and kind of helping guide people from an earlier point if we could build trust, if that would be something that would mitigate some of those challenges.
Yeah, no, totally. I mean, I have to tell you, my boys, they have like a sixth sense in terms of trust and understanding, right? Because access to information and being able to verify, right? Going back into the dark ages when I got my first mortgage, it was, it was a big chunk of paper. I know it's too often we're still there, right? But it's not like I could have gone online to Google to find further information. It wasn't, right? So I had to place my trust in this other party. Nowadays, you can trust but verify. And again, it's really walking back towards the sort of top end of the process. So you start building those relationships. You build that trust because it may not even be you trust that person, right? But you trust the people who trust that person around you, right? It's the social validation construct that we see with all sorts of services, whether it's you trust Yelp, you trust Google, right? That's what's important.
Marvin, I
And
want to
that's,
close.
yeah, please.
Go, I want to close by talking about how we can take the theoretical and make it practical for a lot of these institutions. How do these lenders go about actually implementing some of the things we've talked about today to attract more of the younger generation?
Well, I think one is find the right okay, so identify your mission, find the right partners. It's not all that different, right? But the thing is, right, you also need to think about your expectations as the institution, right? We are all measured on our metrics, whether it's me as a professor or you, Robbie, as a budding, media tycoon, right? You have your metrics and you have to report on your metrics. Your dad may want to see certain metrics, right? And you may say, because we're changing our business model, let's rethink our metrics. Let's rethink the value of a customer. Let's not think about just how much we make with this one loan. What is the total value of that customer? And can we get to a point where, right, we define that, right? Total value of customer. We may lose a few, points or, basis points on one transaction, but if we can extend that, if we can build that, if we increase the funnel, improve the funnel dynamics, we may be able to scale out in different ways, right? So that's the key, right? Finding the right metrics so that even even who those looking over your shoulders can understand what you're doing. This is not a feel-good exercise. This is a very much a capitalistic commercial exercise.
Very well put. I should correct you and say I'm only an associate budding media tycoon at this point. Maybe one day we'll graduate out of that associate.
Better than an assistant. So
Yes, always is. Marvin, really appreciate the time. Kristin, any final words here?
No, this is such a great conversation. Thank you so much, Marvin, for taking the time to chat with us.
fantastic. Have a great one.
Thanks.
Bye, y'all.
Bye-bye.